Hello, everyone. Jason here. It is Saturday, April 28th. It's Saturday morning. I was just sitting down, kind of reflecting on how the trading week went last week. We combined the two trading rooms last week with Winning Trade Room and the Oil Trading Group, and this was our first week together. And so my initial kind of thoughts about how last week went was I feel really good about it. And let me tell you a little bit about why I feel good about it. So, you know the history behind how we came together, and we've kind of covered that ground. But one of the things that Scott and I were talking about, maybe it was yesterday afternoon or yesterday morning after the trading session, one of the things that we talked about was that the personal relationship between Scott and I has been really relaxed and easy, and is been like we've known each other for some time. And so when we talk, it's there's a comfort zone. We can talk about ideas, and nobody's feelings are hurt or anything like that. You know what I'm saying, right? You know what I'm talking about. That relationship that you get with someone that is just nice and easy, and you fit into a groove, and it really becomes really cool type of relationship. And that's the thing that we're developing here right now. But the other thing, though, that I've noticed is that's translated into the same way with the people that Scott has brought into our trading room, right? So I'm a sports enthusiast, and one of the things that goes on when you have a coaching staff, the team or the leader of the organization, or the coach or the leader of the team, has a certain personality type, and people take on that personality type. People that are attracted to those particular leaders take on a specific personality type. And so what I'm finding is that with our first week together in the trading room, it has been a seamless fit with his traders and our traders. And so that was really encouraging as well. Also, you guys know kind of the history and the timeline of the history here between our two organizations. Scott's been around for almost 10 years. I've been around for 8 years. And once you get together with two organizations like that, one of the things you have to be cautious about is the certain way that business has been conducted for that many number of years. Each individual entity has had its own version of success, and so incorporating new ideas and things like that can sometimes be challenging. And so to that end, that was one of the discussions that Scott and I had about implementing his trading tool in front of our group. And so one of the things Scott said was, look, Jason, we've had a lot of change in our organization as it relates to trade rooms over the last 12, 15 months. And one of the things that I need to be able to make sure is that a trading tool is being used in your trading room so that our customers feel comfortable. And so initially I was a little skeptical about that. And the reason that I was skeptical about that is because I've been doing it my way for a long time. I've had my own successes using tools and things like that in my own way. And I was, like I said, I was a little skeptical about doing it. But once I was able to kind of check out the tool and some of that stuff, I really very quickly fell in love with the way that this double tail tool responds in the market. Having said that, Monday was my very first day to trade that in front of a live audience. And so most of you won't have the opportunity to trade in front of 300 people. But imagine if you did. Sit back for a minute and say, you know what? There are 300 people that are watching, analyzing, scrutinizing, and judging your every entry and exit that you take in a particular trade. And so when you have that kind of scrutiny, there are going to naturally be people that say this: you should have done that, you should have done this, and if only you had done that, and only if you had done this, right? And so all of that goes on. And so we had a really interesting discussion as we were kind of showing these charts in front of people for the first time. And I'm going to give you a really good example of this concept. So I was talking to people about, how do you want to see this presented and that presented? And we were kind of going through that initially. And some people in the group said, hey, Jason, I'd like to see black charts. And almost immediately other people came back and said, well, I don't want to see black charts. It hurts my eyes, or whatever, the whole point. And so when you have 300 people in a trading room like that, not every single person is going to agree with what's happening. And so with that being the backdrop, of the way that this went down this week, it was really very positive, right? That something like that has the potential to be, could have the potential to be kind of negative and kind of an ugly experience, you know, when you're doing stuff like that. But it wasn't. In fact, it was just the exact opposite. It was a really cool experience this week. So what I'm going to do here now is, this was our very first week trading the tool, starting on Monday in front of a live audience of 300 people. So what I thought I would do here today is just kind of give you I'm going to run through some scenarios. I have set a back testing module here that I look at to see if the system is viable to start with. And that's really what you should be doing, is, you know, when you're in our trade room, is evaluating whether or not the information being presented is viable and all of those kinds of things. And so what I'm going to do here right now is I'm just going to run through a month's worth of back testing. So I'm going to give you the methodology, and then I'm going to show you a couple of trades using the said methodology. Then I'm going to cut the recording short, do the back testing for a month, and then come back with you and show you the results of that back testing. After we do that, I'm going to come back and talk to you a little bit more about the opportunity that this is presenting to you, and just kind of sum it all up for you at the end of this video. So let's take a look here. Let's start this process. I'm going to go through just a kind of a week here. First thing I want to do, though, is I want to show you these are the trading parameters and the entry rules that we use here. It's a very simple entry system, and let's see if I can expand this here just a little bit. It's a very simple process to get into one of the opportunities. This is one of the oil trading group market maker levels, and this is the winning trade room double tail system. And essentially what you're looking for is a 3-bar pattern: blue, yellow, red against a resistance point. The entry is 1 tick below the signal bar. The stop is 10 ticks. And then in this case, what I'm using for targets is going to be 30 ticks, or a 3-to-1 risk reward ratio on the CL. So again, you're looking for a 3-bar pattern. 1, 2, 3. Entry is 1 tick below the signal bar. You come down into looking for 30 ticks as your potential target. And it's really that simple. The entry system is really that simple. And so what I'm going to do for you here now is I'm just going to go through and run through about a week's worth of scenarios here for you. And then once we get through that week worth of scenarios, what I'm going to do is put the video on pause, and then I will go through and run the rest of the month, and then come back to you and share with you what the results of that look like. All right, so let's take the first one here, for example. So basically, I need to set the parameters here also for you. Basically, I stopped trading at about 10:30 Central Time every day, right? So you'll be able to look deeper, and as you get the tools and that kind of stuff, you can trade as long as you'd like. But for us, we typically come in and start at the pit open on the CL, which is marked here by this green line, and then we finish up by 10:30 in the morning on most days. So this is Friday's trading session, and I'm just going to kind of run through here with you a couple of ideas. So this is a blue bar here. This is a yellow bar into this resistance area, and now you have a yellow bar here. But so it's interesting that this is the very first trade that I would look at here. But essentially, what you are looking for is you would like this bar to be red. So you have two opportunities to get in. One's a bit more aggressive, one's a bit more conservative. If you wanted to get into the aggressive entry, it would be 1 tick below this signal bar here. If you wanted to wait until this bar turned red, you'd be getting in down here, right? So that's 94. This entry here would have been 99. So there's 5 ticks of difference. So it really is your discretion. And again, it's interesting that this is the first one that we're going to look at, but it is your discretion as to how you would like to go about entering that position. Before I go any further here, though, I do need to make sure that I have my parameters set properly in the back testing module here. Let's see. We have, we're going to be assuming 1 lot and 10 tick target and a 10 tick stop and a break even if you get to 10 ticks. And once you get to 10 ticks, it goes to break even, and your target is going to be 30 ticks. So 3-to-1 risk reward. So we'll come back here and we'll come back into there. All right. So the way that I've been trading this in the room is I've been aggressive with the first time touch entries, not the first time touch, but rather I just say blue, yellow, and then I look to get in. So we're going to go short here. We put a red arrow right there just so you can see how this works. Market comes down and hits your first 30-tick target, right? Came down and hit your first 30-tick target there. If you wanted to hold on a little deeper for the structure signal and then wait for this 3-bar pattern reversal, then you would have been taken out at 72. But for the sake of this backtesting purposes, we're going to just use the 30-tick target. So I want to kind of acclimate you to what the results page looks like here. Net profit $300. You've had one trade, and you were in that trade for a total average time in would have been 12.1 minutes. We'll come back and take a look at this a little bit in more detail in just a moment. All right, so you would have had a 3-bar pattern against this. If you were short, you'd have had a 3-bar pattern here. One, blue, yellow, and again, you would have been looking for the first bar, the next bar to break down underneath, which it did not. So you did not have a 3-bar pattern here, no 3-bar pattern here. Okay, so again, you had a 3-bar pattern, red, yellow, blue, but it would have opened, right? Your entry would have been just below the daily structure signal, so that would not have been a valid pattern. You don't want to put in one tick below or right on top of the resistance area. Market comes back up. Then you have the 3-bar pattern, red, yellow, blue. And if you go long here, right, that is the long. Market comes up, gives you 30 ticks. And then you come back here, there is a 3-bar pattern here, but it is, what we look for is at least one tick. You want it to be one tick or more at or above the resistance area. This is 19. The structure signal here was at 20. I want to make sure that this is right. That's 19. That's 20. All right, so you had a 3-bar pattern there. And again, I'm just taking every one of these as they come down the road. That, whoops, you don't want to go long. That is a short. Let me put the red arrow. Okay. And so you put the red, gosh, I did it again, didn't I? Sorry. Give me a second here, guys. It's F3, not F2 on Ninja. All right, so that's a 3-bar pattern. That looks like that would have been a stop out, right? And again, I'm just taking every single pattern as it comes down here. There's a 10-tick stop. No 3-bar pattern here. 1, 2, 3, 3-bar pattern here, right? If you look here, you're going to get another, looks like what looks to be another stop there, okay? No 3-bar pattern here, and then you come back down here and you have a 3-bar pattern here, right, against your level, and you hit that and comes all the way up, gives you 30 ticks. You had another 3-bar pattern right into that resistance area. You go short there, and the market comes down, gives you 10 ticks, comes back up, takes you. So this is an interesting equation here, an interesting scenario here. Market comes down, gives you 10 ticks, comes back up. Eventually, as you see, is going to take you out of break even. What you could do when you had this 3-bar pattern, the entry would have been 1 tick above. So that would have been maybe the place to get out. You could have looked to get out there, but I'm just going to run it the way that I showed you. And then that's it till 10:30. So on this particular day, you had a win percentage of 50%. You had 3 winning trades, 3 losing trades on a 1 lot. These are all, by the way, 1 lot trades. And there would have been 70 ticks positive against the against this information. And again, we're just taking and showing you every single trade as it comes down the pipe, right out of the box settings. You're going to want to add your own particular filters to this, I'm sure. But again, I'm just showing you what it looks like if it's straight out of the box. All right, so again, 3-bar pattern, blue, yellow, red. The resistance area is up here at 69. That's 1 tick to get into it. That would have not been there. That would have been 67. So no entry. 1, 2, 3-bar pattern here against the support area. You get in long. It rallies up, 10 ticks, comes back, takes you out of break even. Again, this is where your discretion is going to come in. There's the break even trigger at 48. This came up into 50, came down to 51. On the new transition, you could have been down here and gotten out at 51. That would have been a possibility, but that's not what we're running the testing scenarios on. We're just running them against a 3-to-1 risk reward right out of the box. All right, so as you continue to scroll through, you had another 3-bar pattern right here. Okay, 1, 2, 3. I'm an aggressive trader, so I would have taken the short 1 tick below that. Eventually, it would have come back as a yellow bar. I would have been a little bit nervous about that. But I'm in, right? And then it comes back, it takes you out here. Then you get a 3-bar pattern, and you push this down to right here. Whoops, again, I did it again. It needs to be a red arrow. Okay, and we put that red arrow there. and the market comes down, comes back, takes you out of break even. You're still down 10 ticks on the day. 3-bar patterns was what we're watching for. There's another 3-bar pattern here, and you put in 1 tick there, right? And market comes up, comes all the way up, rallies right into another 3-bar pattern. You got your 30 ticks. You take your short right here, right? Because that's 1 tick below the new bar against this resistance area, and it comes down 10 ticks, gets you out at break even. You've got another 3-bar pattern here. This is 20, this is 32, that's 30, not a valid pattern. 3-bar pattern. This is the ETH session open price. Again, it's not one of our levels, but you can see how it reacted at the ETH session price. Comes back up, 3-bar pattern. Now you look to get in short here. Let's see, 1 tick below. Okay, and comes down to break even, takes you out of break even. You have another 3-bar pattern here, okay, and you come down, and then this thing takes you all the way down. Now, this is only going to give you 16 ticks because I've told the software to stop trading and close out the positions at 10:30 in the morning, right? But you can see here that trade would have actually given you the additional 30 ticks there. So you've traded 2 days. You're up 106 ticks over the course of 2 days. And so what I'm going to do now is I'm going to stop the video here for now. I'm going to run through the rest of the month, and I'll be right back with you. Okay, so I got the chart marked up. Let's go ahead and see what the end result here for all the work that we put in. All right, so this was a 3-to-1 risk-reward ratio. We said for every losing trade, that would be 10 ticks, and every winning trade would be 30 ticks. The net profit is 700 ticks for, basically we went through the 23rd of March into the 27th of April, and that ended up being, like I said, about 700 ticks on a 1 lot. You can see here that the profit factor was 2.35 to 1. Anything over 2 is considered a good system. And the average losing trade was $100. The average winning trade was $297.56. It's just a little bit shy of $300. We had one of those where I got closed out a little bit early because of the 10:30 time frame that we pushed this into. Here's the thing to note: 27% profitable trades, 41 winning trades, and 52 losing trades. So there was a total trades here of 150 trades. 150 minus 41 minus 52 is 57 scratch trades out of 150 total. So that's about 38% of your trades are at break even when you have a 3-to-1 risk reward ratio. And so what I'm going to do now is I'm going to show you, because I know that you're going to think, well, what if I took one off at 1-to-1 or 1.5-to-1, something like that. So let's go ahead and run a couple of those scenarios here. So we'll come down into the indicator, the backtesting software, and we're going to change this to a 1-to-1. So what I want you to remember here, so we're going to have a 10-tick stop and a 10-tick target. That's 1-to-1. We're going to say, okay, what I want you to remember is at 27% profitable, you had 700 ticks. These are all 1 lots. So 1 lot of trading, taking every single signal that came down the road, gave you a profit of 700 ticks, $7,000, and a win percentage, percent profitable rather, at 27%. All right, so we're going to click OK, and we're going to click Performance. And so first thing I want you to note here is that your actual net profit went down to $3,700. Because you're at a 1-to-1 risk-reward ratio, your win percentage went way up to almost 60% win rate here. And so this is really always the thing that traders get hung up on is win rate, right? We all want to have a high win rate and all those kinds of things. And so you can see here how a high win rate versus a high risk-reward ratio is not as beneficial to you to have that high win rate, right? You want to have your lower win rate at 27% gives you, with the 3-to-1 risk reward, gave you about 3,300 more ticks, or $3,300 more dollars on a 1 lot, right? And so that's pretty cool if you think of it in those terms. And so again, that's a 1-to-1, that's a 1 lot, and this is what a 1-to-1 risk reward ratio looks like. I'll run it one more time here. We'll go to what does a 1.5-to-1 risk reward ratio looks like. So you come down into this area here. We'll come back here. We'll make this 15 ticks as your profit target. We'll say OK. And as you click performance, your win ratio goes down to 47%. but you do make about 160 more ticks. Still less, though, than the 27% win rate at 3-to-1 risk-reward ratio, right? So very interesting to kind of note that. So the other thing that I want you to look at is the number of trades per day is about 4.2. That's a reasonable number of trades per day. That's a pretty reasonable number there. And so, again, you're not over trading, and you have about 4.5 trades per day. So that's also a good number. And so what I did is I ran this with one lots at these different risk reward ratios. So I said, there's 1-to-1. I just showed you that. Here's the 1.5-to-1. That's the 3-to-1 that we started. Here's what's interesting is if these trades are running, they're actually giving you even much more than that, right? So when these trades are actually winning, they're giving you a lot more meat on the bone. You could come all the way up here to 5-to-1, 4-to-1, 5-to-1, and still be right around the same win rate as you were at 3-to-1. 700 ticks, 770 ticks, and in this case, 870 ticks at a 5-to-1 risk-reward ratio. Now, inevitably, I'm going to be asked, what does it look like if you were trading 2 lots? Okay, so let's just take a look at that. We're going to say, we're going to go here, and if you're trading 2 lots, we'll come down here. Your first one is going to go off at, we're going to say your first one's going to go off at 10 ticks. Your second one will go off at 30 ticks. Okay, your second one will go off at 30 ticks. And we need the starting number of lots is, let's see, number of contracts or shares is 2. And then this is basically based on starting with a $15,000 account. And you need to go here. You need to say 1 off and 1 there. All right, so let's go OK. And this is with 2 contracts, 1 off at 10 ticks, and let the other one run for 30 ticks. And so actually, in this case, your percent profitable went way up at 43%. And your net profit was $10,700 on a 2-lot. Your max drawdown here was $800. And again, this is taking every single trade as it comes down the pipe. Now, that gives you a win rate of 43%. So one last test here, though, because, again, I'm a big believer of all in and all out. You may not be. I just showed you what it would be like if you did it that way. And so what we're going to do here is we're going to say 2 off, right, and 0. And we're going to say that first contract is at 30 ticks, okay? And we're going to click OK. So remember, this was 10,700. And here, if you're all in and all out at 2 lots, that's 14,000. So again, the win rate down at 27%. So here's the deal. You got to decide what's right for you. All I've really shown you here, though, is that these 2 tools combined together are spectacularly awesome. You don't have to do a lot of thinking. You don't have to do a lot of tweaking or managing of the process. You simply find your trade opportunity as described by the rules, right? As described by the rules that we provide for you. That's the rules there. Blue bar, yellow bar, red bar into a support/resistance area. In this case, this is the long trade. And you hold on for whatever makes you comfortable. I've just shown you on a 1 lot that 3-to-1, 4-to-1, 5-to-1, while your win percentage is low. This is win rate. Percent profitable is probably what it should be called, because you do have a series of break-even trades, and you do have that kind of idea, right? So you do have break-even trades that go on. But the point is that if you are looking, you don't get paid on win rate. You get paid on what ticks in your pocket. And so I'm going to make the argument here, like I always have, that a 1-to-1 risk reward or 1.5 risk reward is not as lucrative as going 3-to-1, 4-to-1, 5-to-1. What happens when you go through these scenarios like this, however, you do have a lot of break-even trades, because the trade's going to go 10 ticks, come back, take you out, and then you just kind of battle with that. But when the thing runs, as you can see here, 3-to-1, 4-to-1, 5-to-1 risk-reward ratio on this system is extremely beneficial to you. These are 1 lots again. I can't reiterate it enough. Your risk is low. With a 1 lot, you have a ton of room to be able to successfully trade, absorb some losing trades, but then when you hit that home run, as long as you're holding on for 3-to-1, 4-to-1, 5-to-1, it provides you with a lot of good opportunity. So here's the deal. It's simple, right? The best, in my opinion, the best trading systems in the world are simple trading systems. Complexity sells, room memberships, but we're not trying to compel you to buy something super complex. We're giving you a very simple entry system. 3-bar pattern, 1, 2, 3. You had the entry here. You could see that the market came here, and again, this is where you're going to have to do your thing with it. But the market came down 68.13 down to 93. That's 20 ticks, right? And ended up taking you out at break even right up here. May have given you actually a little bit more, but you did end up getting taken out at break even. These are the kinds of decisions you make. 1, 2, 3-bar pattern, red, yellow, blue. Get in long. There's your 30 ticks right there. That's your 30 ticks. So you get the idea. That is how this system works. So again, like I said, this was our first week together, trading it in the trade room. We highly encourage you to come in, check us out again next week, and see how the process is going to work for you. So again, as always, I appreciate the time you spend watching the videos here with us. And until next time, I want to wish you good luck and good trading.